Good evening, all. It's Sunday night. Hope you had a great weekend. Hope you had a great holiday week. We have another holiday week coming up this week. It's New Year's Eve. Market schedule is basically the same. New Year's Eve is on Thursday. Wednesday and Friday are going to be basically half days. So we basically have Monday and Tuesday. Now, the market is trading on its holiday schedule. It's trading extremely low volume and extremely tight range. The tight range over the last few days was less than 12 points on the S&P 500. That's not a whole lot of movement, especially on low volume. We had lots of gaps in the charts, lots of strange movement. If you look at normal market movement over here versus very, very tight, very strange holiday movement where every bar was extremely small. This is something that's going to last this week as well, although I don't think it's going to last quite as much. And the reason why is because for Christmas, people travel. They have shopping to do. They have family coming in from out of town. All kinds of things that are involved with Christmas, and most people take that week off. New Year's Eve is a little bit different because you have to decide what kind of party you're going to go to. Are you going to host a party? Most people don't really travel. A lot of people are on vacation. Yes, that's correct. A lot of people are going to be on vacation, but a lot of people are going to be on vacation and also going to be trading. So I do expect volume to pick up just a little bit, especially Monday and Tuesday. Going to die off on Wednesday and going to die off on Friday as well. This is the time of the year where I personally reflect on the past year. I reflect on the past year and I make adjustments for the new year, and that's what my resolutions are all about. I'm going to write an article about New Year's resolutions, how to prepare for the new year, and so on. I think it's extremely important to have a plan for 2009, so make sure that you are on our mailing list and prepared for that article. I do believe in New Year's resolution, especially if you keep them, and there's a system on how to keep them, and that's by reprogramming yourself, and I'll be talking about that as well. Back to the market. So the S&P 500 is in a very tight formation. Everyone is waiting for the new year. Everyone is waiting for the new administration that's going to be coming in. Everyone is on hold. It comes from the real estate market. Everyone is on hold. Everyone is waiting for that 4.5% mortgage rates. Everyone is waiting for the bottom. That's why no one is doing anything. No one is buying because they're just waiting for the bottom. They're waiting for that opportunity. It's the same thing with the stock market. Everyone is waiting for that opportunity. Is this it? Are we going to go down another 10, 20%? Or are we going to stay basically at the same area? If we look on a weekly basis, then it looks like a V bottom. It looks like the market really made a V bottom over here, was supported and held it. So far it's holding it. As long as it's holding this line, we're fine. If it breaks this line, be prepared for the long side. If you're going to trade the long side, if you're a long-term investor, and that this is what this newsletter is really about, if you're a long-term investor, that's what you're waiting for. We've made you basically short this way, then we close the positions over here, and then over here we have been basically out of the market waiting for the market to do something. Once it breaks either the resistance right over here or the support, which is right over here, that's when you're supposed to act. And I do suggest acting because if the market breaks 922 on the long side and goes back to the old level, that is almost a double. And almost a double is a very nice return. And frankly, I think that can happen quite quickly. I think it can happen quite quickly because there's so much money sitting on the sidelines. There's so many people that are just waiting to act. They're waiting to prop up their portfolios again. So what trades to do? I suggest ETFs. I suggest the SPY. I suggest the DIA, the diamonds. I suggest the QQQQ. One of those are the safest, in my opinion, because they spread you all over the market. Whenever it comes time to it, I'll give you the exact trade if to buy the spiders or buy the diamonds and exactly what price is to do them in. There's one more thing I want to comment on, and that's the hedge funds. We had a serious hedge fund pyramid scheme, scam, whatever you want to call it, blow up. But it is a system that is sick. It is a system that's blowing up right now. We have seen more triple-digit days over the past couple months than ever before. I've shown you this chart before where I show you the average true range. An average true range measures the range, the daily range. Um, Here it is. And you can see how this is a peak. And we've never had this kind of a peak. Here, I'll give you a weekly chart. You can see that we've never been up here. Even back in 2000, the heyday of the market, when the market was 1500, we didn't have the kind of volatility we have right now. So why is that? Well, hedge funds are blowing up. What I mean by blowing up is, first of all, they're facing some serious redemptions. You know, some of them 30%, 40% redemptions, which is tremendous. If you're a hedge fund manager and people withdraw 30 to 40%, you're in deep trouble. That's one thing. Second of all, they are down 30 to 40% for the year. Some of them are down 50% for the year. Most hedge funds get paid based on assets under management. So they make 2% of assets under management. And they also make 20% of profits. Now imagine if you're a hedge fund manager and you're down 40% for the year. How long will it take before you're profitable again? How long will it take before you get paid? So as a hedge fund manager that counts on that for payment, you're in trouble. You're not making any money. If you are counting on assets under management for payment and you have 30 to 40% redemption, you took a 30-40% haircut, cut and pay based on assets, plus you're not going to be making any money for 2 years. A hedge fund is better off right now closing their funds, liquidating everything, and opening new funds. It doesn't sound right, but it is what it is. And that's the reason why we're seeing these triple-digit days, because the volatility is caused by these hedge funds that have to liquidate or have to return money to investors. There's one more thing over here, and that's the ETFs. Exchange-traded funds are the new thing, and I like them a lot. I trade them a lot. I trade ETFs a lot. But exchange-traded funds also tend to exaggerate the moves. And here's an example. Let's say, for example, you buy the spiders, you know, simple spiders, which are S&P 500, basically mimic the S&P 500. Whenever they have to follow the S&P 500, they have to buy the exact same stocks as the S&P 500 as it goes up and as it goes down. And it's the same thing with the ETFs that are leverage, for example, 2 times, the ultras or the ultra shorts, which are 2 times negative, 2 times short. And whenever the market moves, the buying and selling by these hedge funds of these ETFs, of these indexes, the stocks inside the indexes, make every move exaggerate. If the market is going up, they're buying up, whoop, it goes up, and then it goes back down, and then it goes, and that's the reason why we have this triple-digit days, which are absolutely tremendous. I think they're going to stop. As a matter of fact, they have stopped. And that's because the liquidations, I think, are basically done for now. The scared money, the people that really needed the cash, are out, and the other money is about to come in. But anyway, that's my explanation for these tremendous triple-digit days. Anyway, holiday week. I want to wish you a happy new year, and we're going to do another newsletter, and we're going to do another article about goal setting and resolutions for the new year. Have a great week. Trade lightly. Wait for the market to break. 856 is our support. 922 is our resistance. That's all you need to care about right now. If you see the market inside this range, don't trade. If you see it outside this range, if you see it breaking, that's your cue to trade, and that's when we're going to go for the spiders or the diamonds. Have a great week. Take care.